And we are, trying to be at the forefront of tokenization. We made an announcement recently based on a no-action relief that we've received from the SEC, again, more focused on securities, which will allow us to tokenize all of the assets, potentially all of the assets that we hold in custody. And that's 100 trillion worth of assets, by the way.
Alrighty, everybody, what is going on? Welcome back to another Cypher X video breakdown. I have a pretty lengthy one here for you guys today. We're going to be going over some updated levels on XRP and Canton. I'm going to be playing some video clips for you all from a DTCC representative that I think is absolutely bullish for the entirety of the crypto ecosystem. Major confirmations that we're going to exist in a multi-chain ecosystem. We're going to be taking a look at some updated fundamentals that involve the Canton network, some announcements about the DeFi ecosystem being built out. We're also going to dive into this Halborn document, which I find very interesting, especially if you hold Canton coin and you have been focused or following what has been happening on the Canton network. And then I want to also dive into this article that I wrote about in regards to a Federal Reserve Board document that was recently put out that mentions XRP and a multitude of other digital assets, just to end the month of February and show you guys some of the things that the mainstream hasn't really covered or touched on in detail. And then last but not least, I want to finish off with this Broadridge 2026 document that they just dropped, discussing and talking about the digital transformation and what they say about crypto and the digital asset ecosystem. So if you guys enjoy these deep dives, this is such a great way to wrap up February 2026, in my personal opinion. Do us that favor, smash that thumbs up button and subscribe to the platform. So keeping you guys in the loop with accurate analysis. As always, we hope that you guys have enjoyed the accuracy that we provide here at CYPRX, giving you guys these institutional levels via our software days in advance. So back on February 25th, 3 days ago, we had mentioned levels to be paying attention to. Here you can see this is our screenshot of some of the institutional levels that our software had been popping up. And we can see a dark pool sitting at $1.27. Over on XRP's price, taking a look at what just recently happened via the overnight announcement heading into Saturday with the whole Israel, Iran, and United States debacle taking place and escalating. We did see a drop in the total cryptocurrency market cap. The crypto market cap shedding about $60 billion rolling over into Saturday morning. And you can see XRP's price action dropped straight down into that level, $1.27 to the absolute pip. So we really truly hope that you guys have enjoyed the level of accuracy. No hopium, no hype here, no retail garbage at CYPRX. I'm not measuring Fibonacci's and telling you guys price is going to go to the moon. We're taking this level by level. So before we get into the fundamental backdrop, let's just take a look at some levels on XRP and Canton real quick to be mindful of to the up and down side. As of time of recording, if this $1.27 threshold can hold on XRP and we can start to see a bullish recovery above $1.34, that could open the door for a recovery back towards around $1.50 or the most local intraday high that took place last week in February. If we can break above $1.50, that will then open the door for a revisitation of $1.62. And if we can ever end up turning $1.62 into support, that'll open up the door for the next two upper boundary targets at about $1.77 to $1.98. Until we engulf roughly about $1.98 or supersede all of this bearish price action over to the left-hand side from the past couple of months, I'm not getting super excited on higher prices for XRP. Those are the levels to the upside that I'm being mindful of. To the downside, if we see things escalate into the new week, we have a lot of data next week. We have, again, another headline-focused week on the Iran-US debacle and tensions, considering that they just recently escalated. If we see the sentiment sour and worsen, and we break below $1.27, that is going to open up the next institutional level that comes in at about $1.18. Now, in one of our most recent updates as well, utilizing our order flow software, we also see a level coming in at, I believe, at about $1.07. Let me just find that for you guys right here. You guys can see here about $1.07. Sorry, I wasn't sharing the screen. Coming back over here. So the next two levels to the downside, if we do break below $1.27, is going to be roughly about $1.18 and $1.07. Now, those are not the lowest levels that our institutional software is highlighting. underneath about $1.07, the next level to the downside is going to be at 91 cents, where I will personally start to look to dollar cost average into XRP if we were to break into those lower levels. If you guys want these updates, because those are not the lowest level targets that have popped up on our radar, just head over to my X. I gave you guys a full screenshot of the levels that our institutional software is popping up. Just to warn you guys, the lowest level that I'm seeing right now in terms of the dark pools on our radar is about 69 cents on XRP, which would be insane if we saw that happen. Not saying it's going to, we're taking this level by level. So we need to see price below those first levels that I mentioned before we even start to consider that as a possibility. I'm sure we'll have an update before then. Rolling over to Canton's price action. All right, you guys now have up and downside targets on XRP. Canton's levels have not changed yet. The most recent price action we did see on MEXC, we saw the wick straight down to the absolute pip into the 14,801 cent psychological level, and price bounced straight back up into this consolidation range between roughly around 17.5 to 16 cents. 17.5 cents being the upper boundary of this range and 16 cents being the lower boundary. We did slightly bounce out of that down into the dark pool at 14,801. So to the downside, if sentiment does continue to worsen and Canton's price action is negatively affected from that sentiment, albeit it's crazy that Canton has literally just been range bound when the total cryptocurrency market cap over the last 3 months lost over $1 trillion in value. That shows to me that this network is actually being utilized for its underlying utility. Nonetheless, if it is negatively affected by the souring sentiment, to the downside on our radar, the first bearish targets still come in at the 14,801. Below the 14,801, which I personally think right now is a huge stretch, but I would love to see, is the 12,257. And then obviously, of course, underneath of that, the next level on our radar is the 0.9453, where I will be dumping bags into Canton if we were to see these lower level boundaries come into fruition, right? Personally, I'm not going to lie to you guys. I have been dollar cost averaging into these current levels as we have been range bound, trying to take advantage of this lower level boundary at about 16 cents. To the upside, if the top of this range breaks and we see price supersede 17.5 cents and turn it into support, that could open the door for a revisitation of the 18,194. I'm not getting too excited. We need to see the 18,194 broken by aggressive buyers, turned into support, and we need to see price turn this into a floor and then start to trail higher. If we can see that, 19,214 is our next hurdle. If at any point in time we can break above 19,214, that opens the door for these upper boundary targets at 22,582 and 26,110. Okay, taking it level by level, like I said, I'm sure later on this week we'll have another update. That out of the way, you guys now have upper boundary targets on XRP and Canton. Taking your guys' attention over to this Halborn panel discussion that took place, was released on their YouTube just 1 day ago. So shout out to Halborn for this. Only has 20 views. And this is a panel discussion that took place at the very end of January. I want you guys to listen to 2 video clips. I'm going to play them back to back to a representative, Tom Sullivan, I believe his name is, from the Dtcc, go on to talk about how they plan on tokenizing over $100 trillion of assets. And they go on to talk about and confirm how the Dtcc is looking to partner with many different blockchains. Take a second and listen.
Space, and we are, trying to be at the forefront of tokenization. We made an announcement recently based on a no action relief that we've received from the SEC, again, more focused on securities, which will allow us to tokenize all of the assets, potentially all of the assets that we hold in custody. And that's 100 trillion worth of assets, by the way.
The use of the block ledger technology and on the recording on blockchain, I was wondering if you could just comment on that really briefly.
So in terms of how we're, DTCC operates in some ways, you can think of us as a DAO, right? We are a member-based organization. We have several hundred members that are part of our group. We're not a for-profit institution, and we operate at the sort of for the benefit of our members and to make the markets work efficiently. We've done that in a closed system for the past 50 plus years, blockchain has and will enable us to operate in a more open way. And that's how we're looking at it. So, with the announcement that we made and the subsequent announcements where, the first blockchain that was announced was the Canton blockchain, we're expecting there to be many, and we're open to, not only, public permission chains rather, but also public and open chains. And we can do that in a way where we are creating governance and building controls so that we maintain, in the securities world, we refer to this, the term as possession or control, and we can, demonstrate that possession or control. And that was really critical to what the SEC, wanted us to do. So, but, this is really the transition from closed systems to open systems.
I couldn't agree more with this lady. It is very exciting to know that the DTCC just confirmed that they are going to be operating on many different chains. So I thought that you all, as my audience, would enjoy hearing that, because I feel like it settles the entire argument that people have had on Twitter about XRP or Canton this or Stellar this or whatever. The DTCC is not going to pick some chain, right? One chain to rule them all. They're going to operate on multiple different chains. Okay, so I like hearing those types of things. Coming over here to a huge announcement from Evolve Ruse. This is just from February 26, 2026. When we want on-chain finance, quality data on-chain is critical. Congrats to Bloomberg and Kaiko Data for helping us move Canton Network forward. This announcement came directly from Bloomberg.com, and it says, Bloomberg and Kaiko today announced a joint initiative to develop a pathway for Bloomberg's trusted data license offerings to be accessed on-chain via Kaiko's infrastructure. Excuse me. Let's reread that. Bloomberg and Kaiko today announced a joint initiative to develop a pathway for Bloomberg's trusted data license offerings to be accessed on-chain via Kaiko's infrastructure. The work is intended to focus initially on support for tokenized U.S. Treasuries and repo workflows on the Canton network, the privacy-enabled interoperable blockchain network designed for institutional finance. It says this collaboration will utilize Kaiko's data on-ramp services launched on the Canton network in August 2025 to securely write off chain market data on-chain while maintaining IP ownership, licensing compliance, and auditability. Entitlement controls are designed to ensure only licensed participants can access Bloomberg data consistent with traditional data licensing frameworks. This is huge, right? This is massive. And I really like this gentleman, Glenn Hanley, here's post on this. It says, Bloomberg just made tokenized US Treasury repo real. Most people will read data partnership and scroll past. They will miss what actually happened. So shout out to Glenn for this post. Bloomberg is putting its data license content reference data pricing analytics on-chain via Kaiko for tokenized US Treasuries and repo workflows on the Canton network. This is the missing piece, why it matters. High-quality market data was the blocker for institutional tokenized repo. Now it's solved. They are targeting repo collateral workflows, not just buy and hold bonds, straight at the plumbing. Canton is an interoperability layer. Adding Bloomberg data creates a common reference that tokenized cash, collateral, and clearing solutions can all plug into. This isn't a proof of concept. It's infrastructure. Okay. So I really liked this read by Glenn. Coming over here, there was another huge announcement in regards to Canton Network from SBI to wrap up February 2026. You can see Yoshitaka Katao. I believe this gentleman is the president and CEO of SBI Holdings, and they went on to make an announcement that from March 25th, 2026, for the first time in Japan, they will start handling Canton coins. This was announced on the 27th of February 2026. I thought that that was great. Now, personally, what I'm super excited about in regards to Canton is this confirmation from Melvin himself, where just 7 days ago at the Stanford-based Denver 2026 event on a panel discussion, he went on to talk about how DeFi developments are being built out on the Canton network, which enables us as Canton coin holders to earn passive income with our holdings, which I'm super stoked about. Take a second and listen to this confirmation.
Tokenized. And on top of that too, we have a full DeFi ecosystem that is being proliferated right now. We have people building lending and borrowing, swaps, vault products, all the way to AMM, all the way down to
right. And then he just goes on to touch and answer some more of that dude's questions. But that goes hand in hand with the Canton Foundation's post that they put out at the end of February as well, where it says Canton's DeFi ecosystem is quietly ramping by shipping new primitives for regulated markets, configurable privacy, compliance-aware flows, and atomic settlement that still stays composable and DeFi native. Mentions neobanks, stablecoin and synthetic stablecoins, lending, borrowings, perp protocols, prediction markets, DEXs, private liquidity, Bitcoin DeFi, bridges, oracles, payment rails, right? So huge announcements, and just tracking some of these protocols and some of these platforms that have recently been launched, like Send. And I'm just going over these. I haven't used any of these platforms yet, but I am keeping a close eye on them. ACME markets as well. We also had all DeFi reposted from the Canton network. So just more confirmation. And then last but not least, Lattice Finance. All things that I'm paying very close attention to. Coming over here to end the Canton rant. Here we have this document from Halborn Security just dropping with the Canton network. And I said, this is a must read. Now you do have to have, I think, some business credentials to download this document. You come over here, you might be able to just download it with a regular email. I don't know. I haven't tried it with a regular email. But here you can see, you can go over to the Halborn LinkedIn profile. This was posted 4 days ago. And then you just go through the little prompt, click on the link, and then it'll give you the ability to type in your email to download this document here. Taking a look back at some of the highlights that I posted for you guys. DAML and Canton, the trust layer for regulated ledgers, architecture, determinism, and compliance. And just taking a look at some quick highlights, it says this paper examines DAML and Canton as a trust layer for regulated infrastructure rather than relying on procedural controls or institutional assumptions. Trust is encoded as a protocol property via synchronized determinism. Each entitled participant independently computes and validates transaction outcomes while maintaining strict privacy boundaries. This document goes into so much detail. It says the DLR deployment validates Canton's performance. This is where it's talking about its Broadridge application, right, that it helped to build out for Broadridge's distributed ledger technology platform. And it mentions that it validates Canton's performance and characteristics at an institutional scale. Some of the key takeaways, it mentions Canton is best suited for high-value multi-party workflows under regulatory scrutiny, where privacy, determinism, and auditability are critical. Most institutions adopt Canton as an overlay coordination layer via a phased migration: pilot, integrate, expand, optimize, keeping legacy systems in place while progressively moving shared workflows onto the ledger. I feel like we are past the pilot phase with Canton, and now we're starting to really truly see institutions integrate it and then on to expanding it and optimizing it at scale. So pay attention. I just wanted to share that with you guys on how you can go and read this document yourselves. I put some highlights from the document over on my X profile, but definitely one if you hold Canton to take a look at. This is over 51 pages of just absolute juice. Literally will tell you everything from A to Z on Canton and just what's been happening on the network. All right. So I thought that that was just great insights coming from Halborn themselves. Back over here to Glenn Hanley. Shout out to Glenn Hanley for this post as well. He mentioned here, just 6 hours ago, the Fed just told you crypto is coming to bank trading desks, right? That is, when I read that little tiny headline right there, I was like, okay, Glenn, what are you talking about here, right? And he goes on to talk about why this matters. And he refers to this post on the Board of Governors Federal Reserve System website over here, Financial and Economic Discussion Series that they put out at the beginning of February 2026. You guys can download the full paper here. When you get to the full paper, this is what it looks like. You can see it's from February 11th, 2026. So yet again, just another document that I think wrapping up February, most people missed. So I went ahead and wrote a detailed piece in regards to what Glenn was talking about so that there's a little bit more context directly from the document itself. So here's what I wrote. XRP, what did the FSB say about crypto in February that no one talked about? All right, this, in my personal opinion, was huge confirmation that crypto is not going anywhere and that they are attempting to really, truly build out the infrastructure so these institutions can come in at scale. To remain precise and credible, this paper is research, not regulation. It does not authorize bank trading, mandate adoption, or change regulations, but it does something arguably just as important. It builds the risk modeling foundation required for integration. This is infrastructure development and is 100% proof directly from the Federal Reserve Board. Margin frameworks are plumbing. Without plumbing, institutional capital cannot flow efficiently. With plumbing, scaling becomes possible. The deeper institutional signal that most people missed is that the Fed is not asking, should crypto exist? They are asking, how do we integrate crypto into the global derivatives margin system? This is institutional integration. This is the infrastructure phase. This is not retail speculation anymore. For years, crypto has existed alongside traditional financial markets, but not fully inside the institutional framework that governs risk, derivatives, and capital allocation. That is now beginning to change. A recent Federal Reserve staff research paper confirms that crypto has reached a level of scale and importance that requires formal integration into the same margin workflows used for equities, commodities, credit, and foreign exchange. This shift is not driven by hyper speculation, it is driven by the structural necessity of measuring and managing institutional risk. The Federal Reserve makes clear that the existing margining framework known as SIM was never designed for crypto. They explicitly state, SIM so far lacks an ability to calculate IM for crypto-sensitive financial assets despite exponential growth of the crypto market, with the total cryptocurrency market capitalization reaching $4 trillion. This statement confirms that crypto is now too large to exist outside institutional frameworks. Margin system frameworks govern how institutions allocate capital and manage exposure. And without proper modeling, large-scale participation becomes inefficient and constrained, which is exactly why when you read these types of documents and then you see people making like bullish Moonboy price predictions on XRP, and you're like, I wonder why this is not happening yet. It's because, again, they're still in the process of building out the frameworks and the systems and just the infrastructure that will allow these institutions to truly scale in, which is why now is not the time, especially considering what we're living through, to lose faith, and why it's so important to read these types of documents so you actually know what's happening and what's going on. All right. One of the most important conclusions of this paper is that crypto cannot simply be treated like existing asset classes. The research paper explains. Here it goes on to talk about, consistent with the view that cryptocurrencies are digital assets that fundamentally rely on distributed ledger technology and induce financial risks that are significantly different from those in traditional risk classes like commodities or FX, we find that cryptos are best classified into a distinct risk class within SIM that is split into two buckets, pegged and floating unpegged cryptocurrencies as risk factors, and suggest risk rates, calibration, methodologies within the cryptocurrency risk class that is consistent with the existing approaches adopted by SIM. This distinct critical risk classification determines how institutions calculate collateral requirements, manage leverage, and scale trading activity. When an asset class behaves differently, it requires its own framework. To address this, the Federal Reserve proposes creating an entire, this is crazy, proposes that it creates an entirely new crypto-specific risk class within SIM. Says right here, thus, for computation of initial margin for crypto assets, SIM's existing risk class framework has to be augmented with a new crypto-specific risk class. In addition, we suggest creating a new crypto product class that would allow for recognition of hedging benefits depending on correlations across crypto-specific risk factors instead of trying to assign crypto assets to one of the SIM's traditional four product classes. This represents a complete structural milestone. You guys have to understand, okay, think about this. Every major asset class in global finance operates within its own risk classification. Now, creating one for crypto places it alongside, not outside the traditional financial system. This is huge, right? The researchers also identify that crypto itself must be divided into two distinct buckets, like I mentioned, floating cryptocurrencies such as Bitcoin, Ethereum, and XRP, and pegged cryptocurrencies such as USDT and USDC. This distinction exists because these assets behave differently under stress conditions. So the proper classification will allow institutions to measure risk more accurately and allocate capital accordingly. One of the most striking findings to wrap this up is how much crypto risk was underestimated when treated as a commodity. When floating crypto assets are placed in the commodity risk class, their risk weight is calculated at 58. But when placed in a proper crypto risk class, that number rises to 132. This confirms that crypto is structurally more volatile, but more importantly, it shows institutions can now measure and manage that volatility correctly. Accurate risk measurement enables participation. It does not prevent it. Even though the numbers are higher, they still have a number, right? The paper also finds that crypto behaves largely independently from traditional markets. Correlations between crypto and other major asset classes, including equities, commodities, and credit, are extremely low. The research notes this as quoted directly. This low correlation makes crypto attractive from an institutional perspective because it offers diversification benefits. Assets that move independently can improve portfolio efficiency and reduce overall risk. Finally, the Federal Reserve makes it clear that integrating crypto into institutional infrastructure is no longer optional. They conclude by saying, today's rapid development of crypto markets makes it necessary to incorporate new crypto product class and cryptocurrency risk classes in the SIM model to reduce counterparty risk associated with unclear trading of derivatives sensitive to crypto risk factors. This statement confirms that crypto is transitioning into a formally recognized institutional asset class, the seventh tradable asset class. Okay, this is massive. This paper does not mandate bank trading. We have to understand that, but it does build the foundation required for it. Margin frameworks are the plumbing of financial markets. Every major asset class went through this phase before institutional capital scaled in. Crypto is now entering that same stage. The infrastructure is being built, and with it, the pathway for deeper institutional integration is becoming clear. So if you guys stuck with me through that entire mouthful, you see now why this is so important. The things that didn't exist before that are now being recommended, that are being built out now, still haven't been built out. But once they do, we can expect institutional adoption at a granular scale. Okay. And this paper, in my personal opinion, to wrap up February, gives you a clear perspective as to where we're still at in this space. We're still nascent. We're still early. Right. So I thought that anybody that enjoys real research would enjoy that one. Last but not least, Anina Sari, founder and researcher at assettokenization.com, put this out. This is where I got the document from, where she talks about this 2026 digital transformation next gen tech study from Broadridge. So coming over to the Broadridge website, I went ahead and downloaded the document myself from February 25th, 2026. I want to wrap this up by reading what Broadridge said about the crypto ecosystem. You come over here, you can download the full report by putting in your business credentials, and this is what you get. Broadridge Digital Transformation Accelerated 2026 Digital Transformation and Next Gen Study. Just going to read 3 or 4 of my highlights. Here it goes on to mention, we have entered into a period of rapid acceleration of digital transformation agendas in which many firms are challenging the status quo in everything from customer experience to talent to the very core of financial markets infrastructure. It becomes a hyper-competitive race in which some clear leaders are starting to emerge and everyone else is scrambling to keep pace. Interesting. We track the sentiment, reflections, and actions of more than 900 financial service technology operation leaders from around the world across wealth management, capital markets, and asset management firms. So I thought I'd read that highlight so you guys can see kind of where these insights are coming from, because this, in my opinion, is just a super bullish statement. Here it says, the other megatrend with the potential to radically alter the very fabric of financial market infrastructure is tokenization, with firms like Robinhood and Kraken introducing tokenized equity trading in Europe, NASDAQ and the New York Stock Exchange seeking approval from the U.S. Securities Exchange Commission to allow investors to trade tokenized stocks on their exchanges, and the Depository Trust and Clearing Corporation receiving permission to offer a new tokenization service. The trade, clearing, and settlement of tokenized securities are quickly moving from speculation to reality. Remember, I told you guys, we're not in the pilot phase anymore. We're in the implementation phase now. Things are really going to start to ramp up. Here it says cryptocurrency was really the gateway to more widespread acceptance of tokenization, said Rob Kay, Broadridge Chief Digital Officer. Investors are increasingly demanding some exposure to crypto in their portfolios, and firms need to build the infrastructure to support it. I repeat, and firms need to build the infrastructure to support it. That is coming from the DLT officer, right, at Broadridge, which is a systemically important organization. He said that's what we are seeing now. Once you have the infrastructure to support crypto, it all grows rapidly from there. So I thought that that was a great way to wrap up today's video breakdown. If you stuck with me to the end and you enjoyed this video breakdown, smash that thumbs up button, subscribe to the platform. We do appreciate the love and the support. Don't forget that none of this is financial advice. I'm not telling you guys to go out there and buy any of the digital assets that we talked about today. not XRP, not Canton coin. Always do your own personal research and your own due diligence. Many blessings to you guys. Be cognizant out there. Be aware. Keep your head up in this down market that we're currently in by paying attention to documents like this so you can get real insights as to what's taking place behind the scene outside of just price action, and instead focusing on the infrastructure being built and put in place to really truly see institutional adoption at scale. I'll see you guys in the next video breakdown.